All right, today we're going to get right into the mind of a trader. And no, we're not talking about fancy algorithms or some breaking news story. We're talking about the single biggest challenge in any market, the battle that happens right between your ears. We're going to explore all of it through a really high-stakes silver trade that put every trader's discipline to the absolute test. Let's jump in. It really all comes back to this one single idea. This quote, it just flies in the face of one of the most common instincts for any trader, right? That urge to just lock in a small win and feel safe. But as we're about to see, the real life-changing money, it's made by fighting that exact impulse. And this gets right to the heart of it. Most traders, especially when they're starting out, think the market is their opponent. But the real fight? It's all internal. It is a psychological game, plain and simple, and if you want to win, you have to understand the rules of your own mind first. This contrast just lays it all out, doesn't it? On one side, you have that novice mindset. It's fueled by this constant need to do something, always be trading, grabbing tiny profits because you're scared. And then on the other side, you have the professional approach, patience, adapting, and having the guts to hold on for those massive, truly huge gains. And what's so important to get is that this isn't about your personality. It is a learned skill. So why do so many of us fall into that novice trap? Well, it's because of this. Churning markets. See, most of the time markets just kind of chop around, right? They go up a little, down a little, with no real direction. And that environment, it actually rewards bad habits, like taking quick profits. It trains traders to think that's how you win. But those exact habits are what will make you fail when a real powerful trend finally shows up. And that conditioning, it leads directly to the next huge mistake. When you're wired for constant action and then you see some other market just taking off without you, what happens? Panic. That fear of missing out, FOMO. It kicks in and it leads you to chase the trend, which is almost always a recipe for disaster. I mean, just take a look at this chart of uranium. A lot of traders got tired of waiting for their own trades to work. They saw this thing rallying and they panicked. They jumped in way too late, right near the top, and of course they were left holding the bag when it all corrected. It's just a classic, painful example of why chasing what's hot is a losing game. So that's the key question, right? If chasing is just flat out wrong, what are you supposed to do? How do you actually put yourself in a position to succeed without getting burned by your own impatience? Well, the answer is patience. It's as simple and as difficult as that. So instead of chasing uranium, the professional trader was over here watching gold. They weren't jumping the gun. Nope. They were waiting for confirmation. Here you can see they're just watching to see if gold's price can get back above a key trend line. If it does, that's the signal that the next big move is probably ready to go. No chasing, just disciplined, professional waiting. And it was exactly that kind of discipline that brings us to our main event, because in July of 2025, the very setup that patient traders had been waiting for in the silver market, it finally started to come together. And this is where psychology was really, truly put to the ultimate test. I mean, think about this for a minute. Right on the edge of a potentially life-changing move, the market looked weak. The temptation to sell, to just give up on the whole idea out of fear, must have been overwhelming. This is that internal enemy we were talking about, whispering doubt in your ear right when you need conviction the most. But here's what was actually happening underneath it all. According to this analysis, some very large players, let's call them a cartel, had been making huge bets that the price would go down, but they were wrong and they got trapped. All of their bets against silver now had to be bought back. You see what that creates? Guaranteed buying pressure. It's the perfect rocket fuel for what's called a short squeeze. So you've got this massive pent-up energy. You have sellers who are trapped and have to buy, and a market that's coiled up like a spring. What do you think happens when all that pressure finally gets released? This is what happens. An absolutely explosive breakout. Silver just blew straight through that 3750 resistance level. This was the moment of truth. All those trapped short sellers were forced to buy back their positions, which just pushed the price even higher, and it massively rewarded the traders who had the patience and the foresight to hold on. Okay, so the move has started. The theory is great, but how do you actually manage a trade like this in the heat of the moment? This is where having a clear, predefined plan is what separates the pros from everyone else. This was the actual game plan on July 11th. Notice how it's not emotional, it's methodical. Step 1, buy an initial position, in this case using options, which is a way to control the trade with less capital. Step 2, wait patiently for a specific time of day. Step 3, use any little bit of weakness, any pullback, to add the final piece of the position. It's a structured, logical approach to what feels like a chaotic market. In this quote, man, this really highlights the danger of trying to get too clever. In a really powerful trend, if you try to sidestep a minor dip, you could easily miss a giant leap higher. And once you're out, the psychology of chasing makes it almost impossible to get back in at a good price. The key takeaway is you have to stay in the game. All right, let's zoom out. After all the dust settled from this crazy move, what are the timeless lessons we can actually take away from it all? How do we apply this to the next big opportunity? So, looking back about a month later, with the benefit of hindsight, the key psychological lessons just became crystal clear. So, what are the rules for surviving and actually thriving in a powerful trending market like this one? These are the core rules right here. First, you have to adapt. You got to throw out that playbook you use for a choppy, churning market. Second, you have to expect volatility. Down days are going to happen. They're just the price of admission for getting those huge gains. And it's all about having the discipline to hold on tight, to ignore the tiny, insignificant wiggles, and just position yourself to catch those few explosive days that make all the difference. And those are called blue days. These are the handful of huge, explosive up days that produce the lion's share of the profit. You can sit through weeks of the market doing nothing, but if you are in your position for those 2 or 3 blue days, you've captured the vast majority of the entire move. Missing even one of them is just catastrophic to your returns. So you see, in the end, every big trade is a test. It's not just testing your analysis of a chart, it's testing your patience, your discipline, and your conviction. The principles are actually pretty simple, but putting them into practice is not easy. So the real question you have to ask yourself is, when the next big opportunity comes along, will you be psychologically prepared to pass the test?